Hello everyone, my name is Mark. I'm an accountant and CPA and I'm an accounting tutor. And today I'd like to talk to you about the general journal. So let's get started. The general journal is where journal entries are kept for a company. Every time a transaction at a company happens, they make a journal entry. That means when a company buys something, when it makes its sale, when it takes out a loan, or when it's given something. All of those are transactions and all of them are going to have a journal entry corresponding to it. Each journal entry is going to show a date, the accounts that were affected, and the corresponding dollar amount for each of those transactions. So I want to talk about really quick what double entry accounting means too. That means for every single journal entry, there's going to be at least one debit and at least one credit. Sometimes there'll be two debits and one credit, or one debit and two credits, etc. But there's always going to be at least one debit and at least one credit. You can think of that kind of as money that comes from somewhere has to go somewhere. Assets that come in have to come from somewhere, something like that. You can think of it however you want, but there always has to be at least one debit and at least one credit. And then once all those journal entries are made, they're ultimately going to be reflected on what's known as the general ledger. The general ledger is going to show all the different accounts, all the assets and liabilities and revenues and expenses and gains and losses, and they're going to show the total dollar amount for each of those accounts. Okay, so let's walk through an example of a journal entry right now so you can see what I'm talking about. And I wrote out an example here. Mark Company buys 10 cases of beer for $15 each. I personally own this company, so I'm going to use it as an example. First, there would be a date. And we'll put March 5th, 2016. And we said there needs to be at least one debit. So in this case, we need a debit and an asset, which is our beer. We'll put beer supplies. For $150 each, since each case of beer, and there's 10 cases, costs $15. So now I've got $150 worth of beer, but I have to pay in cash. So I need to credit cash. Okay, so beer and cash, which are both assets, we've got beer supplies going up, one asset going up, and we're crediting cash, so one asset's going down. And you'll see that I indented cash a little bit. See how it's to the right of beer supplies, below and to the right? That's how you know it's a credit. You want to indent all your credits like that. Generally, debits are going to be on top and to the left, and credits will be to the bottom to the right. Okay, and that's how you would buy an asset. I'll show you another example of, say, when a sale happens. So let's say Trump Incorporated sells 100 toupees for $10 each. So that's another example. Okay, so we would put a date. Just make up a date here. And let's say that Trump Incorporated gets paid in cash. So we're going to we're going to debit cash now for $1,000. In the last example, cash was going out of the business, so we credit it, but in this case, cash is coming into the business, so we're debiting cash. And we are going to credit sales revenue, since that is a sale and we need to show that we made revenue. And then there's actually going to be a second debit and a second credit when you make a sale. So there's what's known as a cost of goods sold expense. And what that is the cost it took to make those toupees. So we'll say that he made them, it cost $500 to make those 100 toupees. And then we're getting rid of the toupees, right? The business no longer has those toupees, it sold them. So we want to credit our toupee supplies for $500 because we no longer have those $500 worth of toupees. Okay, so those are two examples of journal entries you might see. There's the purchase of an asset and sale. There's a bunch of different transactions that could happen. You could sell stock. You could have a gain on an investment that you have. There's a ton. We couldn't possibly go through them all right now, but you'll learn them as you go. And there's a certain method to each one. Something else that you're going to see on the general journal is what's known as T accounts. And I've got one down here right now. It literally looks like a T, hence the name. And we'll make this a T account for cash. So one thing you want to remember in accounting is that debits are always left and credits are always right. That's an important thing. Debits always left, credits always right. That's probably going to show up in an exam at some point. Okay, so this is for our cash. So we'll use Mark Company here. We know that we had a credit of $150 in cash. And let's make up some other transactions. Say I got paid $1,000 and then someone just handed me $300 because they felt nice. Okay, so this would show up in my T account. At this point I paid $150. This point I got paid $1,000, and then someone gave me $300. At the end of every period, which could be the end of every month or the end of every year, depending on the business, you're going to show a total on your T accounts. So in this case, we have a total of 1,300 debits and a total of 150 credits. So we're going to have a debit balance at the end, and it's going to be for $1,150. And you're going to have a different T account for every sort of account. So you're going to have a T account for accounts receivable, accounts payable, inventory, everything. Gains, losses, you're all going to have a separate T account, and they're going to look exactly like this. Okay, so that's it for the general journal right now. To recap, general journal is where all the journal entries are kept. There always needs to be at least one debit, at least one credit. There's going to be a date and dollar amount. And then this down here is a T account. They're going to have at least one T account for every single account in a business. All right, if you have any questions, feel free to reach out to me on Chegg. If not, I appreciate you watching this video, and I hope to see you again. Bye for now.